Hey there, investorholics and friends. Welcome to another ETF Spotlight review. Today we'll be taking a quick look at VACF, which is the Vanguard Australian Corporate Fixed Interest Index ETF. So this one might be of interest for investors seeking exposure to diversified portfolio of Australian corporate and international fixed interest securities. So you sort of get a dividend every 3 months with this one, so stick around. It might be interest to those people looking for income options. Well, hello there, investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances. Expand your investment horizons and crack your financial sky. Okay, so Vanguard Australian Corporate Fixed Interest Index ETF seeks to track the return of the Bloomberg AusBond Credit plus minus year index before taking into account fees and expenses and taxes. The ETF provides investors low-cost diversified exposure to Australian corporate bonds. It invests in investment-grade bonds issued by corporations including Australia's 4 largest banks, offshore banks, other lending institutions and property trusts. The benchmark has a shorter duration than the broader composite index but a lower overall credit rating or credit quality, so looking at BBB minus or higher by Standard & Poor's rating agency, and therefore higher expected yield, so lower quality, higher yield. Y factor, so we've got the competitive long-term performance. Vanguard's investment approach provides investors with an effective way to capture long-term market performance. Gives you some diversification as the fund invests in a diversified portfolio of securities, which means the fund is less exposed to performance fluctuations of individual securities. Also, low cost investing. The fund has low ongoing fees as Vanguard strives to minimize the cost of managing and operating the fund, as they typically try to do with everything that they have their hands on. Okay, so we had a net asset value here of $53.10, trading just above that at $53.15. Market cap $538,500,000. Management cost is pretty good, 0.26%. You get a distribution quarterly. Your dividend will be roughly 2.64%. So VACF sticks to relatively high quality credit across corporate bonds, semi-government, supranationals, and securitised debt. Supranationals, actually get that out. VACF will be suitable for to be used as a hedge against downside movement in the general market. After the most recent market crash, the current price probably looks okay, although it has come up a bit since I reviewed this last. I'm looking to maybe add it as a long-term position. That might not be a bad option. If you're an investor building a balanced portfolio, this ETF could be very useful, as it is a fixed interest product, so it's a bit different to some of the other ETFs floating around. Having said that, there might be better alternatives on the market, so have a look at GGOV, VEIF and VBND. I think we've reviewed VBND before, so go and have a look at that. I'll leave the card up the right hand corner there for you. Okay, so there are 159 bonds of different companies inside this ETF. As you see, the top issuers represent 34.8% of the ETF. You look at the names here, there's a few I recognise. You've got ANZ, Verizon, Commonwealth Bank, Westpac, National Australia, Qantas, Apple, and looks like there's a couple of other foreign banks sit there. Total number of holdings, we got 389. Pretty much corporate make up 69.1% of the issue, so corporate debt. And obviously, because this is an Australian focused thing, there's actually 52.3% Australian issuers inside this ETF. Performance wise, since inception, you'll be getting just 4% by the look of it, so over the long term. So over the short term, you're getting a little bit higher, but not much higher. So these things really, you're not in for the growth, you're in them for the income. So keep that in mind when you're looking at options. Vanguard rate this as a neutral. So there's probably, as I said before, better products on the market. So do your research and have a good look around. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.